Welcome to StockMarketFunding.com, home to the trader, home to the beginning trader, home to all traders and investors alike. And what we would like to point out to you people here in our pro trading school, because really this videotape is dedicated to the people here, the people that are putting in the apprenticeship. Part of our generosity to the public is just to open your eyes a little bit and whatnot. Now, pro traders, listen up. When we had that correction that I showed on your weekly charts, is that we had made what we call a bottom down here back on 210. And basically at that time, when we were making this bottom, we were plateaued right over here on this percent DS at 37.45. But remember, on the 60-minute, I'm going to go back to the prior top. And when I call this reversal, we had a percent DS right here of 84. We came down and we came up and we tested that. But look at here. We got to a ridiculous point of being overbought, 91.55% on the 60-minute. And we were overbought on your weekly. Same rule applies in your apprenticeship plan as to applying it to your master plan and your master trading plan here at Stock Market Funding. And basically what happened, why we had to go short, just like I've showed on you other charts, is that we had peaked in the indicator. And we were overbought. And we went into a 60-minute sell signal with the MACD. And as soon as we hit that sell signal with that overbought, you can see where the trend went down. And this would apply in your master plan on an equity, an index. It doesn't matter. It's all the same. We went straight down. We had a relief trend right here. And we started to ascend upward. And this was these are all 60-minute MACD bars. That's this indicator down here that you've been taught. And basically, we came back up. It didn't last for very long. One trading day. And we peaked here at 3.8 on that indicator, and we started to drop. And as we dropped, you can see what happened. We went down and we went into another 60-minute sell signal. This will apply in your master trading plan. We started to descend. That was the top there. And basically, in that indicator, you went down. The green line, percent DS, crossed over the black. And that crossover went down, and you came right back down and put in that low. Then we peaked again, and we started to ascend there. And basically, we got a buy signal, and it pulled back briefly right in here, made a little double bottom. But here's the thing. We never went back into the sell signal. We started to ascend again, and we got this greater part of that breakout to right there. And we've kept going, and that was in that time frame. Then we had another crossover. And basically, we had another pullback. But all the pullbacks, that was a low. That low was, this low was higher than that low. That pullback low there is much higher than that one. And we weren't going down in the MACD indicator, and we were turning right away on that RSI, or percent DS here. We were turning upward, and we started to ascend. And the breakout started. And the thing of it is, we've had that 60-minute buy signal here, and we haven't turned yet. But here is where you will be getting ready to short the market, is that when we hit, we're at about 80 today on the percent DS. And what you're being taught is that you're going to go for the extreme movement. If we continue to go higher and this gets up above 90% DS, just like it did in early January, you will be buying the put options on the S&P all day long. And we're not 100% at the extreme level that you're looking for. We're going to find out if we can take out the high of this percent DS, which was at 80. Now, old timers say anything over 80 in the short term could be overbought, or 70 or 80 or whatever. What we're looking at is if we can break this last top, make this percent DS pop up toward the 90 level, that's when the greater trade, and we are going to put it on. However, on the other hand, on that note, if we can't take out 80%, that would mean that we put in the peak. Short term. We're not saying that there's a bear trend here. We're just saying that in the cycle, that we ran a pretty good cycle off the low. And every run up in any low hits a peak in the cycle, and it has to have a pullback. And you would be just shorting that short-term pullback. You're going to be watching your CCI. It peaked right here. When that peaked, wow, wait a minute. Yesterday, we hit 90.89 on the S&P. And we've been dropping, and the CCI was 262, and we've been dropping. That means that this high is having some challenges. We peaked on the indicator over at that high at 90 right there. And basically, we have put a peak in, and we're about 10 units. We're at 80 here on that double, and it made a higher high. But now that percent DS did peak over here in that last high at 90. So basically, if we have any deterioration in this MACD, meaning that if this is going lower, the numbers are going lower, that means that that high at resistance is weaker. And that will always be in your master plan. And the thing about it is, during this big cycle run, during this last breakout, we put in, the top is going to be challenging right here, right now, on the S&P. The thing that the SMF Pro traders in the school need to understand is one thing: when to buy the put option. Peak 1, peak 2 is lower than peak 1 in this green line. That's called percent DS. Percent DS crossed over here shallow. It's not, it's flat. We wouldn't take the trade yet. We're going to be monitoring, though, that if these MACD bars have peaked and we've been descending day 1, day 2, third day, and if these are going lower, that means that the up move is getting weaker. And that will always be in your master plan on the SP 500. Everyone qualifies. StockMarketPundit.com. Take our free 5-day trial. You've been given a gift. And we're going to be watching your other heartbeat. The CCI is declining. If the CCI is declining, percent DS is declining, that means that this current top on the 60-minute chart, at the very current element of time, right now, 10:21 a.m. Pacific Standard Time, this topping area has got weak momentum up at the top. It's not a breakout momentum either. We are going to figure out where, when, and why that we would be a buyer of the January 1150 put. And I'm going to put that in the level 2. And here's the put option. Oh, wait a minute. That's my call option. So I'm looking at where the call option is. The call option back over here on 225, it's made a big move. Let's take a look at this daily call. The call option is inflated right now. It was a buy down here when it was deflated, so we know that the call is getting more inflated, floating up at the top of the contract. And you can see why, because when you go back and you look at the SP 500 now, is that this move up here is losing momentum. And we're going to be looking at when we would strike that 1150 put. And if we can't take out the high and these indicators are diminishing, we know that we can put a put option on with the tight stop because we're diminishing. The up move is getting weaker right here in this cycle. Great move up, which just that we're having a little problem up here, and we may have to go short-term short on the S&P. And that's what this is about.